First, we must acknowledge what most seem to ignore. The economy is not the stock market. Sometimes they can be correlated. For example, a stock drops significantly, company goes out of business, people get laid off, they can't buy stuff, it drags the economy down. But in general, since 2008, we have seen markets artificially supported in a way that we have never seen in history. Can this ever be reversed? You came here for the truth, so let me unveil that for you. Today we're going to look at an issue that is really widespread. If you try to narrow this down to the S&P 500, to 200-day moving averages, to unemployment rates, you are not going to see the full picture. That's why people who are unwilling to study do not understand it, and they get swiped from behind, and this has happened time and time again throughout every cycle. But they just say, I will hold, I will wait, and this is what they do. If you look at the NASDAQ, look at what happened to tech stocks from, let's say, the 2000 crash and on. It took, I think it was 14 years to get back to where it was previously. Yes, everything's going to come back to where it was. The question is, how long do you have to hold throughout these time periods, as well as the fact that when things come back up, are those stocks that you're holding companies that are still going to be successful in the next round? You really never know. There are some big corporations, major corporations, Microsoft being one of them, that has done really, really well over several decades. But the question that you have to ask yourself is, how many Microsofts are there out there? Okay, so you don't just buy Microsoft because they did it in the past 20 years. You never really know. So that's where it comes into becoming diversified and to also be a good, intelligent investor. So let's look into this today. I have way too many charts to show you. That's usually what I do. So let's begin. Global balance sheet high, including China. You can see the G4 plus China right here, just showing you how much money that they have printed as a percentage of the GDP. This is accelerated throughout the years. They did so throughout the 90s, obviously, but this went into more insane levels after the financial crisis. Just to give you a deeper look, as an example, you can see the ECB assets where they have increased. If I bring this up to show you the current amount, yes, in fact, they have gone into record levels right now. Now we're getting the numbers updated as of April 3rd, which I believe pulls March's data, but we're going to get new ones, obviously, as the months go on. I just wanted to show you the newest release that they have here, record levels of money after suggesting that they would stop printing. Of course, that never happened. This is the Bank of England. While they've kept relatively steady over the last, let's say, year or so, they have increased dramatically over the last few years because of Brexit, because of all the other issues that they've been dealing with, and the fact that the economy is not doing well globally. This is something else. Looking at the not in the labor force, we're looking at nearly 100 million people that are currently not in the labor force. This is not going to show you all of the data. This is not a full picture, but I'm showing you several charts. There's always people who try to pigeonhole one thing or another. Why don't you look at 50 charts and start to piece it all together? But if you're not willing to study, then you're not willing to really understand the truth. That's what this is all about. When you can see all of the pieces put together and you can make a realistic assumption of the state of the economy, of the world, and how it is, then you're brave. Then you know that you are actually willing to see it for what it is. But if you're only looking at, oh, well, the economy is doing great, the U3 unemployment rate is at 3.7, you just don't understand. Okay, look at the labor force. This is the not in the labor force. You could also see the civilian labor force participation rate as another one that is very important. Look at this directly from the Fed blog. Okay, this is the Federal Reserve's own website. Okay, what is unemployment? And it breaks it down further. This is several ways to calculate unemployment all in one chart. And the worst of these offenders here is the U6. Okay, and they define it as this: total unemployed plus all marginally attached workers plus total employed part-time for economic reasons, currently sitting at 7.5% approximately. That's a better, by the way, this shows you posted on in 2017. However, the data that I'm showing you in the chart is actually as of the most recent data. Okay, so I just want to make that very clear. This is important because when we look at the unemployment rate, it's such a skewed number. You need to look into it deeper. How many people are working Uber 3 hours a week and that's considered to be employed versus somebody who wants to be working their 40-hour week? They can't get that job. Well, they're not going to end up on the unemployment. They're not going to do so, but this is the state of where we're at today. Okay, so this is what I wanted to show you. I think it's important to get a little deeper into this as well. There are many different calculations of how to pick up on this unemployment. This happens to be one of them. Again, directly from the Fed website, they're showing you this particular index. I'm going to butcher the name if I say it, but it just shows you another way to calculate it. And when you take the broad look at it, it happens to be just under 9%, okay, in their calculation. Again, pulling this data directly from the Fed's own website. No, I am not trying to sway you in any direction. I'm just trying to show you information that is not available on CNN, Bloomberg, and all of that, okay? They don't talk about this stuff, and even the Fed is willing to admit it. Now, they're not necessarily going to put any weight on this when they're looking at their, should we increase interest rates or not, but I think it's important for us as those who are interested in the information to see it for what it is. Looking at this, Japan's March factory output decline flags risk of GDP contraction. This is one country that is actually the most probable to fail in the long term. They're blaming, of course, what's happening with China and the US, but who hasn't? I mean, that's got to be the name of the game. If you're late for work tomorrow, you can blame this situation too, and I'm sure it will count for that. I mean, it's that ridiculous today. Anyway, this is just one country that, despite all of the money printing, they have not been able to get their economy going. Okay, there's constant talk about how well they're doing. I absolutely disagree with this on all levels possible. This country is the biggest risk, as far as I'm concerned, in a longer term. The aging population is going to absolutely destroy them. The amount of debt that they have is unprecedented, and they are doing nothing but owning everything. They think it's good, but printing money and then buying up everything doesn't fix any problem you can ever have. It's ridiculous. This is one connected in with that. US-China talks to resume with significant issues unresolved. This is what we're talking about. But you see Kudlow, he comes out in the news, says everything's good. People fall for it. They swallow it. And that's what they're good at doing. Looking at volatility, it has rarely been this low. And this is a different measurement, not the VIX. BOA's Global Market Risk Index measures implied volatility across credit, equity, forex, and sovereigns. Just showing you here that we've had a couple events in this period going back into the mid-2000s to today. It's only happened 2 times before, maybe 3 times before. So this is just showing you how the risk is off the table, and the times in which we see this are often times in which we have chaos. So this is interesting just to see it, something else to look at. Private sector slowdown. Final sales to private domestic purchasers have declined. You could look at this, over the years, but generally I want to show you from 2018 and onward, we have seen a definite slowdown here. There's no doubt about it. I showed you this in a previous video, but it's important in relation to what I'm showing you today. Global trade volumes are falling at the fastest pace in a decade. Just giving you an idea of what has been happening here. I think it's important to look at all of the data together, okay? Not just one thing. If you notice what people do, they point at just one thing. Look at that. Things are doing good. For example, they look at the stock market. Everything is good. Look at the Dow Jones. Everything is good. My 7 shares of Amazon have increased. And this is really foolish behavior. You can tell these people are amateurs, that they're not in the financial industry, that they don't know what they're talking about, and unfortunately, they will be burned. And that's my whole point, is that people, their pension funds, their 401ks, they're all at risk today. And what do? They pile on more. I see this all the time from regular people who see this at the very end of a cycle. They are always consistently putting way too much onto it. They're investing in the next Bre-X. They don't know what the hell they're doing, but they put the money in and they do not hedge their bets. This is not me telling you what the hell to do with whatever you want to do, okay? That is not what's going on. This is to make sure that you are taking the right precautions with what you do in your investing, in your businesses, and everything that you do. Take the right precautions. That means hedging your bets. That means spreading out. That means diversification. That means all of the principles that every investor should be applying but never do. That's it. All right, I'm done. If you found this video informative, please give me a thumbs up. When you give me a like on this video, you are supporting me, supporting this channel, so I do appreciate that very much. Last but not least, if you want the financial education that wasn't taught to you in school, these two books have everything you need from top to bottom, A to Z. You can get that all at the link in the description. If you want the audiobook, that is available at themoneygps.com. If you want to know what is really going on, the details that you do not see in the mainstream media, you got to watch this video. Click on it and I will see you there.